What do you want? What do you want, Grant?
Just want to chat. What's up?
Nothing much. What's up with you?
Just hang in. Had the time today, so wanted to see how things were going. I can't. I'm worried my audio's not working. You guys can hear me? I've only heard you say a couple things, Iman. I don't know if other people are talking.
We can't hear you. Do you have a question?
I was wondering if you wanted to go through the thread that you talked about yesterday with me.
Sure. You want to pin it up here?
I can find it, yeah.
Trev, how are you doing?
You know, after the recent news that we've been getting, pretty good day, actually.
Yeah. What recent news?
Oh, just the Tesla, I think it was last night or yesterday they dropped the stuff, even though it wasn't FSD, it was autopilot. It was still interesting to see how much of a difference that's actually making when you look at the numbers.
Yeah. Yeah. More than 10 times safer. I wonder what Grant has to say about that.
I missed it. I did just send the thing. I found the thread. What was the comment?
What do you think of Tesla's vehicle safety report?
I think it's good. I think it's good that they're disclosing that. I think I responded to Meta. It's good they're disclosing it. It's a bummer they waited a year to publish the figures. I still have the same questions around how statistically significant it is, given that there's not enough data to really chop it up by like all of the different factors you'd want to adjust for to make any real conclusions around it.
Okay. What's going on here? We have two bears on board right off the get-go. Did you guys strategize in your last Tesla Q live space and be like,
we're a little tired
flood-
because we
we're
were
gonna
up last
flood-
night.
Yeah.
We
Just
were
like
up last night plotting.
getting ready for this. Oh, good. Maybe we'll have some interesting discussions. At the top of your screens is the thread that the best bears can produce. The best FUD the bears can produce. So let's see what this says. Number one, the recent turnover in senior executives is incredible, with most having a tenure well over 5 years, from CFO to head of HR, as well as key engineering execs. What do they know that the market doesn't? Not to mention huge stock sales on exit. Baglina. Omar, we have a thread of about 10, a dozen replies. So let's take them one by one. Let's see what you would like to say to this. Recent executive departures have been a little higher than normal, even though Tesla does have a high history of high executive turnover. So this is nothing new, but it has been a little higher lately. What do you make of it?
Yeah, I think they're restructuring. I think they're trying to cut OpEx in light of lower growth forecasts. But like you've mentioned, they've had times in the past where they've done these types of restructurings, had senior leaders, even, co-founders of the company depart, and the company still continue to grow. So, I mean, it is maybe a little bit concerning. You hope the company has a continuancy of operations. But so far, I haven't really seen any sort of a major impact to the business. So I think it kind of matches up with similar events in the company's past. And we've kind of heard this argument from bears many times before.
Grant, do you want to respond to that?
Yeah, I mean, it's just a factor. I mean, in my mind, the things that are laid out on this thread are not for one, a uniform position of all bears. It's just a number of risk factors that are good to consider. And I think it's more just like, hey, here are the different risk factors, good things to acknowledge on some level. So it's fair. It's not like this is proof positive that the whole thing's on fire. I mean, I don't think that it's like I don't think Tesla's going bankrupt or anything insane. But
Okay.
good to noodle
Let's
through
move
all
on to number 2.
things. Yep.
Company has begun an intensive layoff program. Estimates are around 10 to 20% of the workforce. Further layoffs announced this weekend. LinkedIn. This was as of May 6th. Which appears completely indiscriminate. Entire supercharging teams see linked. I mean, I wouldn't call it completely indiscriminate. I think Tesla is prioritizing AI efforts more than others right now. And I think the layoffs reflect that as well. Omar, would you like to add anything to that?
Yeah, I think it's much more targeted than he's making it out to be. Kind of similar to the first point, you heard Bears say, oh, okay, Deepak Ajua's leaving, JB's leaving, Karpathy's leaving. It is maybe something that's worth paying attention to, but in the past, it hasn't really been predictive. Layoffs in 2019, if you based off, if you went off that and said, oh my God, they did layoffs in 2019, clearly the company's going to have terrible performance going forward. That probably wouldn't have served you very well.
Thank you. We have the author of the thread on the speaker board as well now.
Hey guys, if you can
I
hear me.
didn't ask you to speak. I was just acknowledging your presence. You got to raise your hand. First-time speakers are required to ask questions. All right, number 3. Further to the point of layoffs being indiscriminate, the company has pulled offers made to interns, aborting hiring the cheapest future talent. What has changed in 6 months? Okay, that sounds more like we already talked about that. Number 4, what has changed is demand. Over the last 18 months, the company cut prices aggressively to stimulate short-term demand. This works for a while, but ultimately cutting prices in consumer businesses destroys brands and margins. No longer premium erodes scarcity. Omar?
Well, I mean, obviously, cutting prices is not helpful for the financials of the company. I think that's obvious to everybody. And sort of the effect on consumers, fleet owners, the business itself, I think has been well documented. But I really think the business is in a position where they're really trying to challenge the established norm of buying a gas car. They're taking an aggressive strategy to kind of compete, and market conditions really dictate it. You have essentially an oversupply of electric vehicles, I think, in the North American market. In China, you have an incredibly competitive environment where there's an oversupply of electric vehicles, and you have the supply of ICE cars returning to the market. A lot of the growth during the pandemic was really due to there not being a supply of other cars. So I think the market is kind of rebalancing itself from the strange situation of the pandemic, and um, that's brought pricing down, which isn't great for margins. But ultimately, I do think it's good for the EV transition, and EVs really becoming more competitive with gas cars.
All right. Yeah, I mean, I think hindsight 2020, Tesla probably wouldn't have hired or grown as quickly as it did the employee count. But things changed. The rates went up much higher than people expected. Stayed longer for higher for longer than most people expected. And I think hybrid sales aid into EV sales quite a bit more than at least I expected.
Yeah, and I think it's definitely a true statement that the price cuts really drove growth for a while. But now that we're kind of scraping up against the wall of cogs, right? You can't do a 20% price cut anymore. It stops really becoming possible. So when they first started cutting prices, you heard a lot of the reaction from Tesla shareholders saying, hey, this isn't having the stimulative effect that we're seeing. Growth is, only around where it was last year. And what they didn't realize is, okay, without the stimulative effect of those cuts, you're looking at a flat or down year to year situation.
Right. Zero sum bond.
Hey, you hear me? So I just wanted to come back on the layoffs being indiscriminate. So I've gone through every single review on Glassdoor and Indeed lately, and it seems like a lot of people that were fired actually had good performance reviews. And I guess when you combine that with interns being laid off when they were given an offer, like a couple of weeks ago, I would argue it was discriminate, just to come back on that. And on the price cuts, I mean, look, the 0% interest rates and EV adoption was great in 21, 22. But I don't think you can argue that, I mean, the price cuts have clearly been used to prop up demand. Ultimately, these factories, you need to run at 100% utilization.
Hold on, let's take point by point. So you said you're convinced the layoffs are indiscriminate.
Yeah.
I guess you're implying that this is made out of panic rather than strategy. Is that what you're implying?
Yeah.
Okay. So can you give me a breakdown of how many people from AI, how many people from manufacturing, how many people from energy, how many people from other buckets? Do you have that breakdown?
Yeah, look, no one has that information, right? That's not
Well,
public.
I'm asking you if you have it. So you don't have it?
Well, look, you can go through
It's a yes or
Glassdoor and
no
Indeed.
question.
Okay,
It's a yes or
just
no
on that.
question.
Just
Do you have
let me
I mean,
speak. Just
you
let me
said you did
speak.
the work.
Right? I've done the work.
Doesn't sound like it. All right, we're gonna go through this thread. There's only so far price cuts will go. Tesla has one of the oldest lineup among automakers, with the average age of its models at 9 years, ex Cybertruck. Where is the innovation to spur more
Average
demand?
age of its models. That's an interesting metric.
Yeah. Yeah, that is weird.
I mean, they upgrade their cars very frequently. It doesn't really make sense to think about it in that sense.
I mean, that's like, ex Cybertruck. Where is the innovation? Ex Cybertruck. Cybertruck is the fucking innovation right now. Like, you can't just exclude, the latest iPhone and be like, where's the innovation? Six, Tesla is now in a catch-22, cut margins further and wreck margins and burn FCF and lose revenue growth, or keep prices flat and lose growth. Going into Q2, seeing market share losses in Europe, with Tesla no longer being the best-selling EV in many key markets. Example, France. Market share losses. All right, what do you make of Tesla's? Tesla's market share is declining, right? In the last, especially in Europe, in China too. So, what do you make of that, Amar?
Well, I mean, I think the market's getting more competitive. There's definitely people wanting to go with homegrown brands more. So at the end of the day, they're still the number one selling EV brand in the world. So it still kind of adds up to something. You can always kind of look at one market here or there. But really, I think the market is driven a lot by these new product introductions. So the Cybertruck, the new Model 3, the upgraded Model Y. I think a lot of people view these a lot like technology products, and they want to buy the newest version, the newest features, when they can see that there's something like the new Model 3 and they want to buy a Model Y. I think a lot of people wait.
Trev.
Yeah, so just to make some points here. So, I mean, obviously, Elon's going to do what he thinks is best for Tesla's future. I think future is the key word here. If you look at who Tesla's hiring right now, it's all people in the AI field. And if they have to make cuts in other departments like the supercharger team, I think Elon would say, well, so be it. And I'm not putting Tesla in this, I'm saying Elon specifically. I don't think he cares that much about losing a little bit of margin on their vehicles. That's just not their concern right now. In my opinion, their concern is solving FSD, which paves the way for robotics and paves the way for Optimus. They're looking very, very long term. And there's also the energy segment, which I don't think people are paying enough attention to. I mean, energy is probably going to be the next biggest factor outside of the AI department. So
I don't
the
know
whole,
about that, honestly.
why not?
Well, oh my gosh, zero sum bond is back. Well, the reason is because the interconnect backlog, I think, is a concern. It's a multi-year backlog, and Tesla can produce these mega packs, but if you can't install them, connect them to the grid, then the backlog, the limiting factor is not in Tesla's control, and that's the problem. And then Drew Baglino was heading the Tesla Energy department, so there's going to be a step back, obviously. If you look at the year-over-year revenue growth in the last quarter, it's come down in recent quarters quite a bit. I think the margins will continue to improve as they ramp and optimize the one production line at Lathrop. And I think that will help Tesla through a recession. You'd rather be an automotive company with that on the side, making billions of dollars in profits, as opposed to an automotive company that doesn't have that. So I think Tesla will fare better in a potential recession than GM, Ford, etc., in part because of Tesla Energy. But I wouldn't expect Tesla Energy in the near term to cause the stock to surge or anything like that. I think we're looking, I'm keeping my eye on Optimus and robotaxis. Wessex, can you guys hear Wessex? Okay. Omar?
I think there's no doubt that a situation where you're having to lay off 10 to 20% of your employees is not a good sign. Clearly, the core auto business is struggling, and it's particularly rate sensitive. It looks like we're going to be higher for longer. We were talking about a rate cut in the summer, then September. Now, futures are saying maybe December. David Solomon, CEO of Goldman Sachs, is saying, I don't think we're going to get a rate cut this year. So when you're in a situation like this where you can see the writing on the wall and you have to keep the business profitable while making massive investments in AI training compute and FSD to be able to deliver the growth your shareholders need, it's a tough but necessary decision. It may be that you look very bad. You get some bad press. Oh my God, they laid people off. They fired the supercharger team. They're having so much trouble. But ultimately, I prefer to take the heat on that rather than let it get to a situation where Tesla posts a net loss and they've still got all these employees who, let's be realistic, 10 to 20% of them can be removed and the company will continue going. You look at what happened with X, where the vast majority of the staff were laid off, and we're here still talking on the platform, although it still has some bugs. It works for the most part. So I think, although it is kind of a situation where you can have threads like this that really say, hey, this company's falling apart, it's better overall than having a worse earnings release in the future.
I agree. Zero-sum bond.
Hey, so just a quick point on that. So, look, you're saying it's an AI company, a robotics company. I mean, I guess you all agree with me that the employees know the business the best. And if you go on Indeed, there's 7,500 reviews of the company.
I don't think I agree with you.
Only
on
one
that.
of those mentions AI.
I think your premise is wrong.
Right.
I don't think employees. First of all, you're arguing that there's an intense turnover at this company, and then in the next breath, you're saying employees know the company best. Like, unless you're referring to Elon as the employee, then I disagree with your premise.
So I mean, if AI is huge and the employees are excited about it, why is there only one person mentioning on Indeed out of 7,500 reviews Optimus? Why are only two people mention AI? If it's so pioneering and they're doing so well, why is no one mentioning it? It's a car company. That's all
What are
they
you
talk
talking
about.
Employees talk about Optimus on X all the time, dude. You are light bear. We don't accept light bears in here. Okay, Grant is better than you, and Grant barely makes the cut.
I mean, I think, if you work at the service center fixing cars, you don't really have anything to do with Optimus. if you're delivering cars, if you work on talking to customers for Megapack, none of those things have anything to do with Optimus. But some random employee at a showroom or service center doesn't necessarily know what's going on in the entire company. I mean, pretty much any time you lay people off, people are going to be upset and write something nasty on Glassdoor. This isn't really a revelation.
Grant?
Yeah, I agree. It needs to be taken with a grain of salt, but I think it's also I wouldn't dismiss the feedback that employees can provide on those forums as completely without value. I mean, it's also smart to understand how people are thinking of the business.
Yeah.
Yeah, I don't think anyone from the Optimus team is leaving and posting a review on Glassdoor. Oh, I had a great time. I hung out with a robot all day. 5 stars.
Oh my God, we have more bears on the board than bulls again. What in the world is happening? I just want to remind everybody that you're required to, stay on mute, raise your hands, and wait for me to call it upon you. This has some potential to turn intense. I'm on top of it. Okay, and I will not hesitate to. I do want to kind of just highlight one thing. Like sometimes people give me, a hard time for being a bit more lenient with bears, but we do have a DEI policy. As much as I hate it, it is diversity. What's the E stand for? Equity and inclusion. And the bears are not as good as bulls, in my opinion. But I do want to kind of balance it out a little bit. So I lowered the standards a little bit for some bears so that we can have inclusion. Wessex.
Hey, I pulled my hand down because Omar covered most of it, but I'll just say it real quick. I've been in the employment industry most of my life, and Glassdoor is a cesspool of negativity. And then, secondly, no one's going to go on Glassdoor and say that they had bad employment reviews, and then offer up some kind of opinion.
Which bear do I want to go to next? This is
Let's
ridiculous.
go to Christina.
Sure, Christina, go ahead.
Hi, Aman.
Hi, welcome.
Hi, Omar.
Hey, how are you?
I'm here. I'm still here. And I just got in like 3 minutes ago when Grant and the Magic. I saw him in here. It's funny to hear your thoughts on ex-employees. So, from your point of view, Yaman, all ex-employees are disgruntled employees, so you shouldn't take their side of the story.
Well, I didn't say ex-employees. I meant employees on X. They are talking about Optimus, and the point zero sum bond made was people aren't talking about Optimus.
Do you think was okay for Musk to fire so many employees in Tesla the way he did?
Yeah, 100%.
You realize that he fired directors and senior directors and people that they did a lot of things for Tesla, right?
Yeah, just kind of generally speaking, I'm not in a position to judge what management does in terms of this kind of decision. I don't know any of these people who got laid off or fired. And management team, especially Elon, has millions of orders of magnitude more data points than I do. So I'm not I'm not going to armchair quarterback management.
Yeah, I mean,
Oh.
management ultimately has to make a decision to protect the company, the shareholders, not just the employees who are there today, but the future of the company. And they have some discretion in what they think how they should organize the company, and they can fire people. If we don't like what we're doing, then we can fire management. and that's pretty much how it works.
Yeah, but Omar, when you're talking about VPs and senior directors, those they don't have anybody above them, just Musk, correct?
Yeah, I mean, I'm sure that they wouldn't get rid of anything that they thought was necessary.
Well, I disagree with that because I know quite a few senior management that they were there for 10, 12, 14 years. So again, I disagree with you. And the way a man, it's, cutting relationships, business or pleasure, says a lot about him. And like you said, uh, the guy on the floor who didn't had anything to do with him personally maybe doesn't know what he's doing, but you're talking about the most highest VPs in Tesla that they were fired through an email. And that doesn't look good for Tesla and for people that they were thinking to get, have a future in Tesla in the future.
Okay. We have a bunch of hands, so let's kind of go through them real quick. Pennington.
Yeah, I just wanted to say about the Optimus team. I think the AI robotics group in Tesla is something like 200 people. I think the company has well over 100,000 people. This is a very elite team, the Optimus team, the FSD team. So a lot of the terminations, they were not happening to this subset of people. So I think there needs to be a distinction between manufacturing and supercharger versus Optimus and autonomy.
Magic.
Hey, so it was brought up that the layoffs at Twitter, you can lay off 80% of the company. About over 90% of the revenue is made from manufacturing and auto sales. So, do you think that that's a equal equivalency of being able to fire manufacturing people versus firing software people? Is that equal? I mean, that's pointing to less manufacturing, which means less cars.
So was there a question in there? Omar, did you get the question?
Yeah, I don't think they're just firing manufacturing people. I think they're trying to make the cuts where they don't think it's necessary. But there does seem to be less orders coming in. I think most projections are that we're going to see deliveries down year over year compared to 2023. So if you were expecting more growth and that didn't materialize, then some cutbacks in production may be necessary as well. You can always rehire people when that growth rematerializes.
Magic.
So I wanted to point out, do you guys know what brought down GM and Chrysler during 2008? What the main problem was? Does anybody here know?
Because they led.
Overcapacity. Just sit on that.
Yeah. I mean, actually, it is obviously no one's claiming here. I mean, I think Tesla itself admitted they have some overcapacity right now, right?
It's obvious.
Yeah, exactly. So
they could do well over 2 million units.
yeah,
if they
but does
wanted
that
to.
mean they're going to go under because of that? I think that's questionable. For example, Magic. The new subvented loans seem to be working in terms of lowering Model Y inventories. What do you think of that?
So, I mean, like you said, so I think we all agree that it seems like they're on the cusp of overcapacity, that the capacity issue seems to be accelerating. And if you guys think, if you want to look back on GM, if you want to look back on Chrysler, we can go back and see what happened. And that's a real issue. That's a cancer for an auto manufacturer. And again, even if AI does well, the robotics, you still have a big cancer as part of the business of slowing growth and overcapacity. And if you know about fixed costs, that you still have to pay rent, you still have to pay X, Y, and Z, it turns out to it's high operating leverage. So if you want to go back, overcapacity is cancer for auto manufacturers.
I agree that overcapacity is bad, but I mean, are you familiar with the plan that they discussed at the last earnings call where they plan to produce some new, more affordable models on the line? They say they think they can get to about 3 million units with their existing factory footprint. Then the other thing with AI is really this business has been geared up so that the improvements we're seeing with FSD, I think, as they continue to ship better and better software and scale it to Europe and China, which, by the way, they're making material progress in, I think it could have a positive effect on demand. And we could see some of that overcapacity alleviated through the fact that this product becomes much more differentiated with this type of AI.
Henning.
I also believe that it's a competitive advantage for Tesla, the way he led, let's say, this reduction in the workforce. Um, I mean, the approach was, okay, we don't have cut enough if we are wondering that we have cut enough, I think it was. So rather cutting too much than too less. And I think that, I mean, nobody else is doing that. And this is clearly a competitive advantage. And it's a measure against this cancer that you described. So I think overall, this unemotional way of dealing with that issue is clearly important.
Yeah, Henning makes a really good point. Imagine how Volkswagen is going to respond to any economic troubles. First of all, they're going to wait until the disaster actually strikes. Then, once the disaster strikes, they're going to have a meeting of the supervisory council and the works council. And there's going to be 3 union leaders on the council, and they're going to debate. And by the time they finally agree to a 5% cut, it's going to be too late.
Highlander.
Thank you, sir. Sorry for the voice, folks.
What's your question?
My question is more of a statement that I agree with you. I've been in the auto industry for 40 years. I'm not kissing your butt, by the way.
Okay.
It is far better.
Yeah.
It is far better to cut the wheat in the chaff right now. There is a global auto, and this is what I do for a living, folks.
Okay.
There's a
Thank you.
global auto industry.
Yeah, if you're gonna agree with what's already said, you may as well just skip it. You know, we're only looking for new, insightful comments.
Give a thumbs up emoji instead.
Yeah, exactly. Yeah. Some people just want to hear themselves talk, I think. Anyway, Grant.
Yeah, I would agree with what Omar said. I think that the upshot or what you would want to see happen if you're a bull is that the FSD tech evolves quickly enough that people buy Teslas because of it, are willing to pay more than they are today, all the above. I think that's the big question. I would highlight that that's why I think if I was a bull, I would want to see L3 just because that gives them ammo in terms of like, hey, now you don't have to watch when you're on a highway under certain situations, but that's just my take. And then just one point, a piece of trivia related to German employment law. Some of the German employers are actually pretty nimble. I worked with a German business during COVID and they have, you know, legal permissions for companies to furlough workers 1 day a week that actually act in a pretty flexible way where we didn't have to fire a bunch of people. We were able to just peel back in the kind of uncertain time. So that's just neither here nor there really, but kind of cool. That's something the US should probably consider adopting.
Henning.
So I worked for Volkswagen. I'm in Europe, Germany. You get a lot of severance pay if you are escorted to the door, let's say, from Workers' Council. So to me, for Volkswagen, the Workers' Council is indeed the cancer. And I think this will be a big problem in the future coming years. And one other thing, I'm really looking forward to a tipping point again to FSD, because in Germany, for example, a lot of the issue for the sales drop is that 80% or 70 to 80% are corporate vehicles, and they are depreciating asset at this moment. And SAP, for example, quit their large corporate contracts with Tesla. So this is an issue. And I think once FSD becomes, let's say, more of an attraction to customers,
and the underlying asset starts appreciating again, or stable, or is more stable, and then the rates also help, let's say, the average price, then I think we're getting to another tipping point in the other direction. And I hope that this obviously happens in the US, and I also hope that this happens in Europe.
Okay. Just a quick reminder that this space is only possible because of my patrons. The link to Patreon is at the top of your screens. This is a space where people love to hate, and yet they still come because this is where you learn the most, the fastest. So to continue that, you may contribute on Patreon, even if you hate the space. It's just fine. Trev,
Yeah, I was gonna ask the Magic or any other bear. So, do you think Tesla is in a better position or worse position now than in 2008?
is
Way
Tesla
worse.
worse or better than today? Of course, better. I mean,
Yeah,
we have.
because he mentioned about being over inventory. So Tesla made it through that. So why can't they make it through now? Are they in a worse position now than they were back in 2008?
Well, I don't think. First of all, we're not debating whether Tesla will go bankrupt or not, right? And I think maybe there's one person that may question that, but really the question is more about, is the valuation going to go down, higher in the face of different scenarios? Yeah. Grant,
I don't think I've got my hand up. Does it look like I do?
what's the next point in your thread?
Oh, I don't have it open. Did you remove it from the top?
I did. I thought we were going to go down this employee retention thing, but we didn't. So let's see. Let me find the thread again.
Do you
Man,
want me to?
this guy has long threads. He has got this one thread with 74 tweets. Who reads that?
There are a lot of good risk factors for people to be considering about Tesla.
Is he just copy pasting from the 10Q?
In some cases, but I mean, it's also just
He is, isn't he?
solid information, you know.
Yeah. Who is this zero sum bond? Is that any relation? Is it cousin of zero sum game? Because that guy disappeared.
Couldn't tell you.
Mm-hmm. I can't find it. Anyway, let's switch to Nvidia. If you guys don't want to talk about Tesla anymore.
I thought we
Yeah.
could go through some of that. Are we not wanting to cover those points? Why do you take it off?
Well, we talked about majority of it, and I didn't see anything interesting beyond that. I mean, is there anything that like you want to discuss specifically?
Well, you removed it, so I can't really look, but I think there's a lot there to discuss. If you don't want to, I understand.
So what, for example,
Well,
off the top of your head?
you removed it.
Well, if it's that good, you should be able to remember, right? Is there one good point? I'm not going to keep, like, I kept it on there for 20 minutes. It's nonsense.
Yeah, just like the other guy couldn't tell you, how
Okay.
AI comes.
Omar, what do you
So,
think of NVIDIA? This
just really
suck is up.
quickly before we
Yeah.
switch to Nvidia, which I'm happy about. I'm an Nvidia shareholder. It's now gone from about 17 to 19% of my portfolio just by growing over the last day. So that's good. I think it really is this amazing AI boom that's kicking off that I think is going to have a few different phases to the trade. But just, one last point I'll make on this thread and whether it's worth discussing it. Last night I went out around 8 o'clock and I said, let me go give some Uber rides with FSD. And I gave 3 rides and it did them all with 0 intervention. And then now I come here the next day and there's a bear saying, oh, the glass door reviews look bad. I just think, looking back on this, it's not going to be a thread that ages well. But yeah, I mean, it's pretty crazy. You just look at these numbers from Nvidia, and they're just nuts. I mean, the net income is 7 times larger than the year ago quarter. They're just growing like crazy, and the data center business has obviously been the major driver of that. So, it's really a segment that not too long ago wasn't even a material part of the business. People thought, okay, gaming GPUs, Bitcoin mining, that's really the company. But I mean, this AI data center boom is just huge. And people have said, oh, this can't last forever, but it kind of looks like it's just starting. You're seeing these consumer internet companies, enterprises, even sovereign customers start to really um, push out these applications. For example, Google pushing AI overviews, incorporating Gemini into their products. The demand for inference compute is skyrocketing. You have OpenAI with their new GPT-4o model, obviously processing voice and video is more computationally expensive than processing text. And to do that quickly with the new H200s, which Jensen delivered to them, you're going to need more inference compute. You're going to need more training compute. So I think so. I forgot, maybe Dan Ives or someone said this is more like 1995 than 1999. Maybe there is going to be some moment where the bubble pops here. I think obviously this growth that Nvidia is seeing can't really last forever, but I don't think it's going to be over within the next 4 quarters either. So I really see this as, I think Goldman Sachs had a good sort of analysis on it, where they said there's really 4 phases to the AI trade. One is AI training compute, right? The sort of picks and shovels. In order to make AI, you need these AI factories that NVIDIA is selling. They're, training compute, their NVIDIA DGX H100s or B100s or H200s. You need their InfiniBand networking, all that stuff. You need this AI factory. So that's kind of phase one of the AI trade, is AI training compute. And the second phase is really infrastructure. So all the infrastructure that goes into supporting that. So you want to really be looking at downstream, networking companies, data center companies, maybe even utilities in certain areas where data centers are going to be built, or things like that, that are really going to sort of take advantage of this massive rise in data center compute, because these huge data centers are really needed to train a competitive model. So there's a little bit of an arm race going on. Then the third phase of the trade that Goldman identified is really AI enabled revenues. So you think about it, all of this spending, 20, $30 billion on NVIDIA AI training compute, it's really because obviously the companies feel that they have some opportunity to generate revenue in the future. So that's where I think you see products like, Google Search, ChatGPT, Tesla FSD, products that actually use that AI training compute to create a product that is a groundbreaking product, and hopefully the revenue generation opportunity is even bigger there than the value of the training compute, right? If this is a gold rush and Nvidia is selling the picks and shovels for the gold rush, well, someone eventually is going to strike gold, or else they are not going to be buying any more pickaxes and shovels. So really, they believe that the opportunity from making these AI companions, these robots, these self-driving cars, is actually several times larger than the market for the training compute, obviously, or else the business wouldn't make sense. So then you're going to see all these AI-enabled products come to the market in the coming quarters and years, and really start to grow massively, kind of like what we're seeing with NVIDIA. And then I think the fourth phase that they identified is productivity gains. This is really the most broad-based impact, where your average mom and pop shop, let's say a bakery or whatever, is able to take advantage of these products and services to have increased productivity. So more economic output with less people. You're able to use, assistants like ChatGPT. Maybe there's a robot in your shop now who's helping with some tasks, automating some tasks. Maybe you've got a self-driving car that's doing deliveries, and that's reducing your overhead. And then you have sort of just a broad-based economic increase in productivity. So I think it's kind of an interesting framework. Obviously it's just kind of a theory. It may not actually play out exactly like that. But I do think that there's kind of a pipeline here. We're seeing the first phase of this AI boom with people buying a ton of these things because they realize there's immense economic value in what they're doing. But we're going to see, the next few phases of the trade. And I think it's something that investors should be keeping an eye on.
Magic.
Hey, circling back to Tesla, in terms of, I don't know if you guys remember, but Hertz, the CEO, got fired for taking delivery of a bunch of Teslas, and they have a lot
Well,
of.
we don't know that's the reason. You're assuming.
Okay, let's say by their own account, they have said that they are offloading Teslas, and they're saying that the maintenance is a lot higher than they expected. So even if FSD is solved, Hertz has a large amount of sample sizes that they can determine if that is the case. So it is a widespread, less reliable than expected product, and that's why they're offloading them, and they can't even sell them for 20 grand at the moment. So are you guys saying that Hertz is incorrect in terms of the maintenance requirements, that they don't know how reliable a car is? Because they operate hundreds of thousands of cars. So I think that they would have enough data to see how
Yeah,
reliable the car.
just to kind of level set here, Hertz already went bankrupt, as you know, and now they're down about 90% from the top. They're going to go bankrupt again. It's a $1 billion company. Their CEO changes all the time. I don't even know what the guy's name is, to be honest with you. And obviously, a lot of CEOs sometimes look for, point fingers for their own failures. So I think that's what's going on here. Omar?
Yeah, I mean, I think Hertz sucks. The CEO sucks. That's why he got fired. Nobody gets fired for buying Teslas if the business is doing well. Okay, the business lost a bunch of money. Now, if I think you actually didn't read what Hertz said very well. Some people just read the headlines and they don't actually read the details. If you look at like Consumer Reports rankings for Teslas, they have the lowest maintenance cost out of any car brand in the US market. Not the highest, the lowest. And Consumer Reports hates Tesla. So they were really, in pain when they had to publish that. But it's the truth. It just doesn't require a lot of maintenance. Now, if you look at what the issue was with Hertz, they were crashing a lot of cars. They were seeing a lot of cars crash. 50% of them were allocated to Uber drivers. Now, these Uber drivers are driving crazy, right? They got to make as many rides as possible. They are maybe not familiar with the Tesla, maybe not used to the power it had. And they were seeing them crash. It's not like everybody was crashing, but it was a high enough rate. And the repair costs, once they were crashed, were high enough. And the insurance costs were high enough that it was a big issue for them. So they ended up saying, shut this down. We can't rent to Uber drivers anymore. They're just crashing these cars way too much. We need to reallocate these cars to our retail rental fleet. And then they had an oversupply. The amount of people who are renting them, most people are confused. They're like, what is this? I don't know how to use this. The amount of people who were renting them, and they were also higher priced, was not enough compared to how many they had. So they had too many. And then Tesla starts cutting prices. Now you're losing value on all of these cars. And they had to sell some of them, right? They're not bringing any rent, they're depreciating. You kind of just have to bring supply and demand in line. And they still have, I think, 60% or something like that. But that was really just a function of Hertz being a crappy business and their strategy of lending to Uber drivers causing them to have losses related to crashes. Now, if you actually got FSD to a point where it's perfect and the cars never crashed, then you could eliminate that issue or maybe eliminate, most of the crashes or something like that. And maybe there's stuff they can do to make the cars more repairable in the case of a crash, make it so that less cars are totaled. So maybe there's some room for improvement there. But generally, if you're not going to crash the car, the maintenance cost is very low.
Magic.
Yeah. So okay. I mean, you can say Hertz XYZ. Do you guys know what the highest appreciated auto has been in the last 2 years? Have you seen the depreciation schedule for a Model 3 and a Model Y?
Okay, so do you have a question?
my question is, if the car is so good, why is the market depreciating it so much? The market is telling you something. You can trick a few Tesla faithful, but you
Well,
can't trick.
first of all, it's kind of coming down from a very high point, right? It had increased a lot in 2021.
That's
So
not the
so
question though. The question
so
is,
if you look at it, for example, from 3 years ago when people first bought the vehicle, 3-4 years ago for $35,000, $39,000, to at what price can you sell that today? Anything about 20,000 is better than BMWs, Mercedes of the world. So
again, I think
Yeah.
that's the market saying that they value it less than what they bought it for.
I mean, that's obvious, but that's true for all vehicles.
I mean, the depreciation rate was extreme compared to other vehicles.
Yeah, but here's, I think, a primary reason of that is because Tesla is the one who kind of started this huge price cuts in early 2023, January 2023. And then those price cuts continued for the next few months in a very major way. So when that happens, obviously, you're going to first hit your own existing fleet resale values. And then it will take some time for others to, especially because Tesla doesn't advertise in a major way, it's going to take some time to kind of shift demand from other brands to Tesla. So I think the jury is still out on how elastic the demand is for Tesla. Give it another year or two, and then we'll talk. Omar?
Yeah, so I think historically they've actually held their value very well. If you look at sort of analysis pre-pandemic, a lot of people remarked that these cars are holding their value better than any other car. But you had kind of an anomaly situation in the pandemic, which I think you can't draw too many long-term conclusions from, where we had obviously a freak situation where the global auto industry essentially shut down. You had production stop. You had the chip shortage then. It took a long time to ramp that production back up. And that created a situation where people were trying to buy cars and there were no cars to buy. So you saw both new and used prices skyrocket. In Tesla's case, because of their direct to consumer model, they adjusted the prices directly upward. So, the Model 3 was supposed to be the $35,000 car. It ended up getting, quite a bit more expensive than that. I think it was in maybe the 50,000 or 40,000, high $40,000 range or something like that. Now it's come back down to I think 39,000. So still higher than what it was supposed to be, but down significantly. But if you really want to do a like for like comparison, you have to look at not just the sort of MSRP, but really what people were actually paying. Because while there was a shortage, people were paying elevated prices for used vehicles. In many cases, they were paying dealer markups on new vehicles. And those people also saw a lot of depreciation on their vehicles. So I don't think it's really a Tesla specific thing, but really a market thing where there was a shortage of cars. And if you bought a car during that period, then you were going to see a lot of depreciation as the market normalized. Now, Tesla really produced a lot of cars during that period. They ramped up massively. They wanted to take advantage of the situation where other car makers could make cars and they were able to sell cars at these elevated prices. It made EVs relatively competitive compared to gas cars because the gas car prices rose so much that even though the EV prices are rising, it actually made them look more competitive and there was supply available. So Tesla probably had a lot of people, who they sold cars during the pandemic, who unfortunately had to deal with the situation where car prices, fell a lot as the market normalized. And that's put a lot of people into a situation where they have negative equity, whether it's negative equity on a Tesla or some car they bought from a dealer with a $10,000 dealer markup. And now market prices have returned to normal and it's difficult for them to buy a new car with the negative equity that they have. So I wouldn't really say this is indicative of some long-term trend with Tesla. I think it's, a little bit what's happening with Tesla, but mostly the pandemic was the primary factor in the recent volatility in the auto market.
Magic.
Yeah, I agree. It was a widespread problem. I think the one point I do want to bring up is that So with Toyota, they send it to the dealership, right? And the dealership marks it up. So a customer will be mad at the dealership, and the actual brand of the company does not be destroyed. It's not destroyed. Now, if Tesla increases prices, since they are a direct-to-consumer brand, when they raise it up and prices start going down, that actually damages the brand. So what we're saying here is on the way up, actually taking on inventory risk is very beneficial for Tesla. But on the way down, the sword cuts exactly the same in the opposite direction. It is actually really bad for the brand and really bad to hold on to this inventory. They cannot dump inventory like traditional auto manufacturers that do not do direct to consumer. They have a dealer network. There's a reason that automakers have dealer networks, and that's what's starting to happen.
Okay.
I think you're right that they do have to take the blame instead of the dealer, and that is kind of a downside. But overall, the direct to consumer model is so much better. You don't have to deal with the hassle of going to a dealer, that I think it probably wins overall. It definitely has its pros and cons, but
Exactly.
I love it.
Yeah. Has its pros and cons. But the direct to consumer on a net basis seems to be working better for Tesla. I agree. Finflexity, Trev, then Henning.
Yeah, also, I would just like to point out that despite severe price cuts, the Model Y depreciation over 5 years is currently 39% according to CarEdge, which is nowhere close to the most depreciating cars in the US.
Yeah. But he was saying, Magic was saying over the last 2 years. So he kind of picked the starting date, which is fine. I think we addressed that point. Trev?
Yeah, I had a quick question for Omar. So speaking of Nvidia and their growth with making and selling these H100s, a lot of them to Tesla, do we know if Optimus is being trained on neural nets right now? And if so, is that data center being used to train Optimus the same as FSD, or do you think like they're separate right now?
Yeah, there's complete overlap in the AI training compute needs of Optimus and FSD. So the same NVIDIA or Dojo chips that are being used to train FSD can also be used for Optimus. Now, I expect that with the massive amount of money they're spending on NVIDIA, Dojo is probably getting heavily prioritized. That's probably why they moved Pete Bannon up to head the team. You know, you just sort of do the math on this. They spent $1 billion on NVIDIA. NVIDIA has 78% gross margins. Theoretically, if they could manufacture a chip, and they're just having TSMC make it, we can have TSMC make a chip too. And if you can design an equivalent chip, a chip that has equivalent performance, you could get 4 times the compute for the same amount of money. You could have saved $800 million. Think about how many people we could have not fired with an extra $800 million.
Henning.
Yeah, I wanted to come back to the Tesla topic before. So I think, to me, with all the thought on Elon, I think that the most important thing in my mind is, if rates are normalizing, then we are in a better situation, net better situation overall, because everything is progressing in the right direction. And if rates are normalizing again, on the other hand, there must be no excuses, because in a normalized rate environment, Tesla should sell every car they make. They should be able to ramp up production to the fullest. They should be taking full advantage of the EV credits. So I think overall it's quite a good situation still for us. Although I'm a little bit worried about the economic situation, given that even with this kind of price cuts hitting, let's say, margins and also EPS, even with the EV credit, it's still in this situation. I didn't expect that, to be honest. I think nobody did expect that, more or less. So, but overall, in 2 years, I think we're in a pretty solid situation.
Magic.
Okay. So last quarter, cash flow was negative about $2 billion. And I know a lot of bulls talk about how much cash is on the balance sheet. I think it's going to be an accounting nerd thing, but you have to back out accounts payable because that is liabilities to actual suppliers. So when you back that out, it's much less than you think. So if you look at kind of the actions that are taking place, it looks like a cash constrained business. If you look at the firings, the abruptness of the firings, and you look at the balance sheet in conjunction, you have to take the accounts payable and some of the accrued liabilities into question, and you'll find out that the cash is much less than you think, and we do not know what the balance of how they can access that cash. So
Yeah.
That's something that I see. That's something that I see bears talking about a lot. But I mean, they have a payment schedule with their suppliers that I think is net 90 days or something like that. So you're going to have accounts payable that is large just because you have a number of suppliers that have payment terms where their payment isn't due yet. But that's going to be offset by revenue generated throughout the quarter. So it's not like at some point they just have to pay all the accounts payable and now they don't have any cash left. It's
Yeah.
essentially a revolving line of credit as they continue to produce more cars. Now, if production falls a lot, then you're going to have a impact on working capital. But
Magic.
yeah,
So I think we all agree that production is slowing down. So that is a factor. So you're talking about cash balances, accounts payable. I understand that accounts payable it goes up and down, but it's gone straight up quarter over quarter. So that plus production slowdown, plus we don't know what other accrued liabilities
Yeah,
are on it.
if you're going to see, like, this is FUD, right? And this is the kind of FUD that if somebody is not experienced in accounting, they would eat it up. Because and you know this too, because what you really have to do, if you're going to include accounts payable, which is a current liability, then you have to also include in your calculation at least finished goods inventory, unless you're telling me that Tesla is stuck with that inventory. Is that what you're claiming, that Tesla cannot sell its finished goods inventory, Magic?
So what I'm saying is that if you're going to finance at 0.99%, that is a net negative to cash flow. So even if you do have accounts receivable, that means that you're going to receive less cash because you're going to doing financing in-house. So that exacerbates the already problem of cash.
Well, that's not necessarily true, right? So if you hold it on the balance sheet, maybe, yes, but you cannot, like, if you kind of get into a situation where that you're kind of describing where Tesla is dwindling down
what needs to be fulfilled in order to present a new compensation package?
Omar, can you take over for a little bit? I need to deal with a technical issue.
Sure. Yeah, let's just worry about the last compensation package before we start thinking about that. My head's already, exploding from the 2018 one. All right, so if anyone has any thoughts, things they want to discuss, hit the request to speak button. We got Tesla giving rides to regulators today for the UNECE, European and Asian regulators. We have Nvidia earnings yesterday. If you have any comments on that, any comments on Tesla?
Version, do you think they're being shown 12.4 or maybe even a later one?
Yeah, if you look at the sign up sheet, it actually says hands free driving. And I think Blue Cruise and some of the other hands free systems are demoing too. So I assume it's FSD 12.4. Right now, that is in the hands of a few select employees. It hasn't even gone out to the Wave 1 employees. I did hear that it's supposed to be going out to the first the first customers this weekend. And we would probably hope to see either today or tomorrow or Saturday it start to go out to all the Wave 1 employees if it's going to go out to customers soon. So it's definitely out there. I think they are demoing it to regulators, and it should be getting out to most employees and customers this weekend, hopefully. And that'll have
Had two questions around the Nvidia earnings. First was, so I think Tesla previously had the chart in their earnings that said, I think they're around like 35,000 H100 equivalents. And then I'm pretty sure I listened to this a couple times that on the call yesterday, I think it was a CFO said that they helped and kind of had the same takeaway, or have you caught that, or anyone else?
No, I didn't have the same takeaway on that because I think that the numbers are actually far exceeding 35,000. Like I think they said about 37,000 H100 equivalents, and they're supposed to get to around, I think they said 85,000 by the end of the year. But I've also heard behind the scenes that they've ordered 100,000 H200s or B100s or something like that, and that they've started taking delivery of some the year. And I'm sure they're building out Dojo at the same pace as well. So I wouldn't read too much into the number. From what I've heard, the number is really going much higher than that. It seems like they're headed to kind of 100,000 and above. And you could see Jensen kind of, throw a lot of compliments Elon's way. He said he called FSD 12 a breakthrough, and he said they're very ahead in self driving. So I think that he is appreciative of Tesla spending $1 billion, XAI spending, and probably that spend increasing in the coming years as they continue to invest in AI. So, I mean, in some sense, it kind of shows that Dojo has been a flop to some extent, right? I mean, I think they're doing some really interesting things with the system on a wafer design, but the goal of Dojo was to eventually make it so we didn't need to buy these training data chips from Nvidia the same way we no longer buy their chips in the car. And Nvidia has just been just outdoing themselves so much that I think Dojo wasn't really competitive with the D1. So we'll see with Dojo 1.5, Dojo 2, maybe get some more information from that at their next AI event. But I think if Dojo was going better, we wouldn't necessarily have to write such a big check to Jensen. So that's unfortunate. They do have Pete Bannon on the team now, and he's great leading the Dojo team. So maybe things will turn around there. Finflexity?
Yeah, I would just like to point out that TSMC began their Dojo manufacturing program at scale just this year. So technically, it's not really sure that we are competing, that it is comparable against H100 or not. They are just supply constrained at this point.
Yeah, maybe. I think supply constraints are definitely part of it. I believe Dojo's on a 7 nanometer process node, and the latest Nvidias are on like a 2 or 3, like a 3 nanometer process node. So they're less advanced chips. I mean, it's a more advanced architecture. There's also a lot of just sort of software things. Can they really make it work and deliver the right results and get the same performance? If the NVIDIA chips are faster, then it's just a waste of time to try and use Dojo. So I don't know. I'm not really sure how that's going. Maybe we can hear more from them at some point. Klaus?
Yeah, I just needed to unmute. I'm pretty bearish on Tesla, and I'm here to learn something. And there are some of the established truth in the bull community that I simply can't get my head around. And it's been brought up again today about the Tesla energy. First of all, the growth isn't that bad, or isn't that high, but it seems that there is an established belief that there is an almost insatiable market where Tesla can sell their solutions at a very high margin. And what intrigues me about this, and why I want to understand that, why that business case is so good, is that today Tesla buys their batteries off of others who also compete in that market. And I've never ever seen a market before in where you have almost insatiable demand and you can sell in competition against your own suppliers at very, very high margins. Why is this not questioned? Why is this just an established fact that this is going to be enormous? Because looking at the numbers, it's not like it's not growing much, but there seems to be no doubt that it will. But the whole concept of buying something off your competitors, selling it in competition with them in the same marketplace, making enormous margins, I don't understand it. I know there's some IP going into it, but most of it is batteries that they buy from competitors in the
Okay, you're repeating
marketplace.
yourself.
Yeah, I mean, I think you're right to some extent. It is essentially a commodity business, right? Everybody's selling these battery packs, and they're all the same. Energy goes in, energy goes out. BYD and CATL are selling, energy storage systems. But there's sort of there's the cell itself that's storing the battery, and then there's the battery system, which is really made up of many cells and many packs. And there's software that orchestrates it, that does things like auto bidder, where they can monetize the battery pack automatically. They disclose that they've done 300 million in revenue in automatic trading with auto bidder. So there's some software stuff, the ability to stack mega packs together, a lot of experience that I think differentiate them a little bit. But you're right, it is for the most part a commodity business. And while I do expect it to be a large market, it remains to be seen if they can really take a lion's share of that
Yeah.
market. But long term, they are also making their own cells. Right now, it's a small thing, but they've mentioned in the future wanting to make their own cells to put into these mega packs. And I think long term, they could eat up more of the value chain and be very vertically integrated and hopefully competitive with companies like BYD and CATL.
Yeah,
But
the one thing I would
people
add
talk
for
about
that,
this like
Klaus,
it's
you have to stay on mute when you're not talking. You have to stay on mute.
I am talking.
Stay on mute and raise your hand, just like everybody else. Sometimes people come up here and they think they're so special. They should have special treatment. You're not special. And then the other thing I want to add here is to what Omar said. The growth rate year over year has come down over the last year or so on the Tesla energy business, but Michael in the replies pointed out earlier when we were having the earlier conversation. In the last earnings call, Tesla pointed out that our energy business continues to make meaningful progress with margins reaching a record 24.6%. We expect the energy storage deployments for 2024 to grow at least 75% higher from 2023. So there seems to be a bit of a temporary decrease in the growth rate, and it's going to accelerate in the second half of the year.
I mean, it's actually growing faster than the car business because the car business is doing so badly. And I think you saw the groundbreaking today of the Megapack factory in China. I think this thing is probably going to do more than 50% of the Megapack production volume. I think it's going to account for the majority of Megapack profits, and they'll probably have the factory done in less than a year. So that makes me excited. And like, you just look at the battery supply chain in China, it's just unmatched. I think for the US Megapacks in Lathrop, we've got a 30% tax incentive here. You can sell into the US market with that and probably be competitive. The Shanghai location, I think, will be great for exporting around the world. And will probably just open up some new markets, honestly, just given the economics of a China based factory versus a California based factory.
Yeah. Yeah, I mean, Klaus also started out saying, like, there's all these assumptions that are baked into the stock. That's not even true. Like, what evidence do you have that the market is pricing in a huge value to Tesla's energy business today?
Yeah, if you asked most of these people, they'd say, mega what? What's a mega
Yes.
pack?
Yeah. And the margins, like you said, is higher than the automotive business. The growth rate is much higher than the automotive business. And that's expected to be the case for the next few years. So if you look at the disclosures in the 10Q, every Megapack that Tesla can produce today has a buyer. Flexity.
Yeah, so this is basically the dynamic of the battery sector. Basically, we have two stages. One is the manufacturer, that is CATL or BYD, and then there is an integrator, which is Tesla. So, it's a very separate market. It's very different to what, you would see directly from BYD. They don't make such specialized software for bidding and such. And the simple thing is that the Megapack business has a lot of potential because we are going to be consuming so much electricity just for data centers alone that if you start adding megapacks to data centers, it's about 20 megapacks per 40-year-old data center. So just imagine what you would put in a data center which has H100s or B200s.
Thank you. Klaus.
I still don't understand the overall value of this, because as Omar said, they tested something worth 300 million that in revenue, and who knows what they earned from that. It might be minuscule, but it's like the market for battery capacity is already there today. Tesla doesn't have a big market share. It's a growing market, but Tesla is already growing slower than the market. So it's just, I've seen, you may not love him anymore, but someone like Gary Black, he has been touting this as a new fantastic catalyst for growth and value, and I
So, like,
still
but
understand
see,
it.
like, I can't speak for him. What do you want me to do? Some guy out there is making a point, and you want to defend his point.
No, I'm
What's your
asking.
question? Just ask a question.
I'm basically asking if you are assigning any significant value to that kind of business today,
I
or
think,
if
like, right now, I think Tesla Energy's growth is limited by production, and also the interconnect backlog seems to be pretty. There needs to be some regulatory transformation, I think, on that front. But I think that will happen. And ultimately, though, as Omar said, Megapack's value is going to come from auto bidder. And I think Tesla will have an advantage on that front. But that's not in the near term. Near term, Tesla's happy with any contribution to the bottom line during this difficult time of high interest rates where the auto business is always struggling. And I think Tesla's better positioned because of that versus other legacy automakers. So, but longer term, auto bidder, I think, will play a big role.
Yeah, we need a lot of battery packs. If we're going to move everything to electricity, we need a ton of battery packs. So we're moving cars, we're moving our homes to heat pumps, we're hopefully using an electric stove and not getting that pollution inside your house. All of this is going to lead to increased electric demand. Then you look at these data centers, you're spending billions of dollars on Nvidia training compute. Can you afford to have the power go out in the middle of your $1 million training run? No, you're going to want a Tesla Megapack to, first of all, help lower your energy cost, get some more renewable electricity, hopefully stored in the battery, but also be able to sort of operate off the grid and continue to run even if the grid has an issue.
Klaus, let me ask you something. Do you know the capacity of the Lathrop factory?
I've seen something about purely from what I recall, something like 40 gigawatts a year or something like that.
Okay. Do you
I don't know
know
if that's right.
I mean, that's the target. I think right now they only have one line, which is supposed to be half of that, and they're going to ramp the second line in the next 12 to 18 months or so. So
Okay.
when that factory ramps, what do you think will be the price per kilowatt hour for the Megapacks?
I don't see a catalyst for that to change, because regardless of the software that's on top of it, if you are looking
No,
at
we're just talking
something,
Megapack. We're just talking hardware right now. So forget auto bidder. That's not in the next year or two, I don't think, or any material way. But in the near term, just hardware. Do you know the price of the Megapacks per kilowatt hour?
no idea. And I don't see a catalyst for that to change significantly, since the majority of what goes into those are batteries that they're buying off of competitors anyway.
Yeah. So let's say, for example,
Tesla has single-digit growth in
hold
a
on.
in a market where they have less than 10% market share.
Okay. I know this is your first time. Maybe you're not used to the space, but the question was, do you know the price per kilowatt hour? And the answer should just be no. So let's assume for a second that once Tesla ramps to 40 gigawatt hours annual capacity, let's assume the price come down a little bit from current levels, and that gets us to, let's say, $400 per kilowatt hour. Okay. And assume a margin of 25% gross margin, which is what Kirkhorn said they target when they bring a new product to market. So in volume, 25% gross margin. I think generally the space agrees that there's not much of an operating expense required for Tesla Energy. But let's assume operating expense of 5% of the revenue, so 20% operating margin. So 40 gigawatt hours times $400 per kilowatt hour times 20%. You're looking at $3.2 billion of operating profit contribution. I mean, that's not nothing. And that's just from Lathrop. Now we also have Giga Shanghai coming as well. So call it $5 billion total operating profit annual contribution. That's pretty good as a starter. And then Omar mentioned Tesla is going to ramp its 4680s, vertically integrate into batteries. And on top of that, later on, you're going to have auto bidders. This is a pretty profitable, good business that I'd rather have than not have, right? Complexity. Klaus, go ahead.
Yeah, but I don't understand the assumption that just putting more stuff out there, because it's still a market in which Tesla today have roughly 10% of the market, and they are competing against their own suppliers. So it's this notion of, if you build it, they will come. It was the same argumentation that was used about battery factory capacity for cars initially, where by now it's obvious that there is a surplus capacity. But it was believed that if just enough cars would be built, they were only constrained by supply. And now this exact same thought applies to the battery business.
Well, that's not necessarily. I mean, that's just reason by analogy, and you only have one data point. I mean, one of the key reason why auto businesses right now is, or two key reasons why the auto business has overcapacity is, one, interest rates have surged, which obviously doesn't apply to the energy business much, and then secondly, hybrids have come in and become proven more profitable. Toyota has done a great job of taking advantage, turning people's range anxiety into profit, but also that also doesn't apply. And then second, you're saying, Tesla's competing with the suppliers and everything, but that's in a given market. Let's say, like maybe in China, CATL, BYD batteries will be more popular than the US. But if that's the case, like how is Tesla achieving 26% gross margin today, right? So what's your response to that?
I don't know how they achieve 26%.
Yeah, and by the way, that 26% margin is the overall Tesla energy business, which includes obviously lower margin energy generation like solar panels, etc. So megapack margins are probably much higher than that, right?
But what is the catalyst for that? Why are customers, if you look into infrastructure, they get very technical, they are very into specifications, they are very rational when they make decisions. Why would anybody overpay for a Tesla product and elevate margins on a Tesla products when they can get the same capacity from somebody else? You're talking about the market as if there is no competition, but there is competition because 90% of the market isn't Tesla.
Yeah, there's competition. I don't think anyone is claiming there's no competition on the energy business.
But how will they then retain the margins when they scale the business?
Well, like I explained, in the near term, there's a lot more demand than supply for megapacks, and in the outer years, I think older bidder will play a much bigger role. Finflexity.
Yeah, I would just like to say to Klaus that you have some AWS, you have Google Cloud, you have Azure. Okay, before this, we had separate data centers from each company. You don't necessarily give up on margin just because it's more price. You're okay giving up on margin if it's more pricier, if it's saving you money in the long run. The logistics of operating your own battery capacity and managing it, managing the auto bidder, managing the software is much more than the convenience that a mega pack will give a factory or a data center.
Yeah. I mean, I think like the other thing is, if you want a reason from analogy from Tesla Automotive, Tesla has the best margins on EVs today. Look at the Ford GM margins. They're negative gross margin on their EVs. Look at Rivian. You could make the same argument that these are, similar vehicles. And some people make the arguments that some of these vehicles are even better than Teslas. And yet, Tesla has achieved scale much faster at a much lower cost. And it's kind of interesting to me that at the beginning of the space, people are blasting Elon for cutting costs. And then in the second half of the space, how are they going to have higher margins? Kind of talking both sides of their mouth here. Omar?
Yeah, I think you don't want to confuse a piece of the product with the product. So there's a difference between a battery cell and a battery pack. And really, with these large scale deployments, we're really talking about a battery system with maybe 40 or 50 different megapacks, right? And they're all talking together over the network. So, of course, a large part of the value is in the actual battery cells themselves. And if Tesla's just buying them, then obviously they have to pay a supplier if they can't do it themselves. But a lot of the value add is in the orchestration, the ability to have this battery pack and have it just operate itself, make money for me, control it all remotely, have them talk to each other, sync up. Soft technology like AutoBidder, the virtual power plant technology, stuff that they've built up over the years since they did their first deployment with Australia. I mean, they have more experience with this than almost anybody. So I think you don't want to confuse the product with a piece of the product, which is the battery cell.
Yeah. Okay, we have a bunch of hands and requests to speak. We're going to go through them. So quick points, please. But as a reminder, this space is only possible because of my patrons. If you'd like to support the space, the link is at the top of your screens. We're going to go one bull, one bear. Brandon, go ahead.
If it's already been said, sorry, but I'll say it again. In China, I think that, as Tesla always does with like new iterations of things, they'll probably have much higher margins on those packs, as well as since there's almost quasi infinite demand for this stuff, the margins aren't going to be an issue because if someone does it cheaper but they're sold out, you have to get it from Tesla, and Tesla's software is much better as well.
Thank you. And I'm going to circle people around, so don't take it personally when I do. Magic.
Hey, so going back to financials, so it appears that quarter over quarter, automotive sales dropped by 12.8% and inventory built by 17%. So both things are going in opposite directions. So that again, that exacerbates the cash issue.
Yeah, well, Q1 is seasonally weak. Q2 should be better. Jimmy.
I was going to say
I have nothing to say. Oh, God. Who's Jimmy? Jesus.
Jimmy all in one.
The real one. I was going to say if this gentleman doesn't understand the Tesla battery pack, I urge him to research Samsung and Apple and why Samsung owns like 98% of the screen market, but Apple still competes with them using their own screens.
Okay. Claus.
I still get the notion that the conception or the perception is that if just enough is built of it, there's enough compelling reasons to buy one of the battery systems. But if you look at the utility market today, 90% of people buying utility batteries are not buying Tesla batteries. So why is if doubling Tesla's supply, why is that?
I need your support for that claim.
You can look in the utility market if you look in
okay,
statistics.
you cited it as a fact, so provide the support.
I will see if I can find you a link and drop it to you.
Thank you. In the meantime, Lauren.
Yeah, I think one factor on the battery systems versus competitors is most of those competitors are out of China, and like these are huge, long-lived assets. It's not like some cheap person in a third world country buying a $15,000 car. Like the people making these decisions got to make sure they're going to last 10, 20 years. Do they trust the quality of the Chinese products? And also, do they really want to install a bunch of power management system in your state-of-the-art AI data center that may have the CCP peeking under the tent flap software-wise, watching what you're doing? I think it's a huge advantage to Tesla that's way beyond just the batteries and maybe the list price itself.
Yeah, I mean, Tesla definitely has a home court advantage in US, but let's hear what Machine has to say on this.
Well, I just joined and I heard some talking. I hope no one said Tesla has infinite demand for these batteries, because I would just probably fall out of my car. The fact is that
your
Tesla's
hardware too car.
My 2.5, get it right. The only advantage Tesla has is that they're American, and we Americans, we're the best. We're the best. We're the best at putting tariffs on the Chinese. Okay, we're scared of Chinese technology, as I've personally experienced. And so, yes, in the US, Tesla Megapacks will do well and have higher margins. But in the rest of the world, there's not really going to be much benefit. There's going to be a lot of competition. They're going to have okay margins like everyone else. But ultimately, these energy systems are meant to be reduced in costs long term, because there's a huge demand at lower price points for these. People are not going to be splurging all over at 10x the volume at these prices. Everything's price sensitive. All these solar battery combined systems, everything they price out in order to scale, the prices have to come down, and they will.
Wessex.
And when I looked into this about a year ago, there was really only one other player out there. It was a partnership between Siemens and a company called Fluent, I think, out of Europe. And I don't think BYD and all that really had any grid scale batteries being deployed yet. So it sounds like Klaus. I'm trying to understand if he's saying that these are grid scale deployments by these other companies or not. And if you could post the source at the top, where we can all see it, I'd really appreciate that.
Finflexity.
Yeah, Yaman, my point was about your, revenue generation from megapacks. So I think you went somewhere wrong in the calculation. It is coming out to 12 billion in raw revenue after,
Well, I
after.
applied the margin.
Okay. Okay, yeah, that makes sense.
Yeah. Okay. Jimmy the Other. Other.
Wait, what do you want to say?
I don't know. What do you want to say? Why'd you come up?
Well, I want to talk about geopolitics because if I don't talk about geopolitics in this room, I get kicked down. So I'm waiting for something like that to show up. I just feel like I'm in a straitjacket right now. I talk about it, I stay up, but then I get moved down if I don't talk about it. Now you're asking me for something that's not related to geopolitics.
Well, actually, I mean, this is kind of, I guess you can pivot into that because, like Machine just mentioned, Tesla has home court advantage when it comes to megapacks in US. Machine.
Yeah, I can pivot it into geopolitics. And this is a combination of Tesla and Boring Company. I think we have a real opportunity here, folks. We can build a massive wall around Gaza and the West Bank filled with megapacks and solar panels on top that could ultimately give energy, sustainable energy to those territories, not a country, territories right
Okay.
now. Wait,
Listen.
I'm not done. Wait.
No, hold on. We're done. We're done with that. So we have 18 minutes to go. And after that, I'm going to start my Patreon only space where there's no machine. And the signal to noise ratio is much higher because of that. So the link to that after party is at the top of our screens. Finflexity?
Yeah, I'm gonna do Jimmy the Otter a favor. And today we had Chinese ships surrounding 40 Chinese ships surrounding Taiwan entirely and multiple planes. And we had Nvidia's for last night. So,
Yeah, I mean, the Chinese doing these types of drills is pretty rare. I don't think they've ever done a drill where it's literally in every location around Taiwan. But the new president of Taiwan is surprising with his remarks. I think a lot of it's for domestic consumption. A lot of Taiwanese people live in China. Chinese people are quite aware what the remarks were. The Chinese media need something. They have something now with those drills that show the power of China today. Regarding Nvidia, look, it does require TSMC to build these chips. And if you look at accounts receivable, they have these huge orders and they're backed up pretty heavily. Nvidia needs more manufacturing capability, but from what I've seen about the new TSMC plants in the United States, it's going to take years for these things to come online, both due to combination of infrastructure and labor. They don't have enough engineers, TSMC-like engineers at these plants. So I'm not really sure the relevance to Tesla, to be honest, but in terms of the chips for that Nvidia sells Tesla, from my understanding that Nvidia has been very good at Tesla. They've been able to deliver Tesla's chips. There hasn't been any kind of pause in any of the shipments. The relationship is quite old, compared to other companies. So I wouldn't say there's going to be any blockages. The main blockages for chips right now is for the data servers, where most of Nvidia's revenue comes from, and a lot of companies who want that compute aren't getting it right now because they're in the wait list.
Okay.
Tesla's not in that position.
To Tesla Energy, Sawyer posted a couple of stats on Shanghai factory. Let me just read those out real quick. Tesla held the groundbreaking ceremony today for their Shanghai Megapack factory. $200 million factory, Q1 2025 startup production, initial capacity of 10,000 units per year, so 40 gigawatt hours, $10 to $15 billion of revenue per year from this one factory. New factory covers an area of 200,000 square meters, aims to export megapacks to overseas markets, including the Asia Pacific region, to support the global green future. Machine.
Doesn't Tesla use TSMC for their inference boards, compute boards?
Omar?
Number 4.
No, I believe it's Samsung. They're using TSMC for Dojo though.
Omar, was there a recent news about China, a rumor China is planning to go into Taiwan in the next 6 months or so? Did you see that one?
Well, ASML. So ASML is this company that makes these ultra lithography machines, and they're basically the one company in the world that can make these machines needed to make these high-end chips. And they refuse to sell to China in part due to pressure from the US. So China can't really make these most advanced chips, and they have all these machines in China. So they released a statement that said, "Hey guys, don't worry. If China invades Taiwan, we can remotely disable these machines so they can't be used." And everyone was kind of like, "Oh, why'd they say that?" And that kind of started some rumors like, "Oh, are they about to invade Taiwan?" But I don't know. I don't know if they're going to invade Taiwan. Yeah, I think I remember Xi Jinping saying he wasn't going to invade Taiwan, but he could always just do it anyway. I mean, it wouldn't really be an invasion. It would probably be more like a naval blockade or something at first.
Jimmy, what do you think about that?
I don't think they'll need to invade Taiwan, to be honest. I think that if you look at the demographics right now, the two economies are so highly interconnected and dependent that over time, many Taiwanese people will simply feel like they're part of China. The new generation are very divided in terms of their loyalties. Some want essentially an independent Taiwan. Others believe that reintegration of China is the only way that the economy of the island survives, because you need to diversify away from just semiconductor manufacturing. They have lots of issues regarding unemployment right now. But if there would be an invasion, if that would unfortunately turn out to be true, China is producing 5 new aircraft carriers. This is not the year the invasion will start, guys. They will need to manufacture and finish their 5 new aircraft carriers, 10 new attack submarines. I mean, their aircraft carriers are slightly smaller than Nimitz-class carriers, and they're under construction. There have been many satellite images of those things. In fact, one of the new ones just finished doing some sea trials not too long ago. So if there would be an invasion, you'd have to wait 3 or 4 years, because those aircraft carriers need planes. Those planes also need to be tested. There need trials, pilots need training. By 2030, they will have a fleet larger than the United States with enough anti-ship missiles that will probably be, to be honest, more effective than the US Navy, especially around that region. They will have such incredible dominance in that region. I very much doubt that there would even be a challenge if they would choose to invade, to be honest. Thank you.
Thank you. Finflexity.
Yeah, so to that point, the rumors about the invasion, they come from the fact that DoD reports last year showed that China intends to show aggressiveness in the region of the South Pacific Sea. Uh, During October of 2024 to October of 2026. So they expected an invasion between the 2 years. So basically, after the Taiwanese election, where they guessed that the Liberal Party would win. So they expected an invasion between that time. So that's why they're talking about it.
I mean, people have been saying they're going to invade for a long time. I haven't seen an invasion yet.
Since the 1960s.
Machine.
I think Taiwan should send out a request for proposals for boring tunnels that go straight from Taiwan to the United States. And Boring Company can submit for it with their excellent technology. And Hamas can also submit for it with their excellent technology.
Too soon.
Yeah. Yeah, you should, dude. You know, you listen to these things that he's saying. You should see the messages he sends me in DMs.
I just want to say there actually was a proposal by Israel to build a canal across Gaza from the 1990s. This proposal was basically an alternative to the Suez Canal because the Suez Canal, under normal usage, is heavily backed up and requires a lot of waiting time for ships to cross. So that canal would require tunnels, yes, in order for cars to continue traversing over the canal, correct? So I wouldn't say what you just said is actually, crazy. Those proposals are legitimate proposals. I mean, the Suez Canal got built in a very close location, and creating canals across the Israeli area is actually surprisingly important because there's also a proposal, which was potentially going to be financed by China, to create a canal system which would require tunnels for cars and trucks from the Mediterranean to the Jordanian Valley in order to create piping for water and for shipping, because Jordan needs the shipping requirements too. They would love to be able to take ships from Amman and from there through the Sea of Galilee
All
across
right.
into the Mediterranean. So it's a real thing.
All right. With 8-minute mark, and then we're gonna start the Patreon only space where there's no machine, and for that reason alone, I think you may want to join. Finflexity and then clause.
Yeah, no, I was just commenting on Machine's idea that they are doing the same thing across the Arabian Sea, where they are connecting Dubai and India from an underground tunnel, which is so long.
Clause.
I just want to compliment Omar for his anecdote that he's heard about them invading for years and he hasn't seen it happening. I've heard about self-driving cars happening for almost a decade, and well, I have actually seen it happen, but not from Tesla.
Yeah, I ride in self-driving cars all the time without a driver now. My Tesla does all my drives for me. I rarely have to intervene. It's really happening. Unlike a Taiwan invasion.
Yeah.
I mean, this is like a decades long conflict, So you can really go back, and it's been a tense situation for a long time. I think obviously people are talking more about them possibly trying to take control back of Taiwan. Right now they consider it their territory, but it's governed independently, so we'll see what happens, but it's a situation that's been brewing for decades, not one that's necessarily likely to change all that much this week. It's very complicated. China considers it to be part of their territory, but US-China relations are kind of
Yeah.
a big part of it too.
Yeah, man. We had this bull bear debate today early on. We talked a little bit of Taiwan. We talked a little bit of Nvidia. What do you think about this purpose-built robotaxi, next-gen Waymos that pictures came out?
I think it looks great. This looks way better than what they have. And I think the Jaguar I-Paces are like going out of production or something, so they needed something new. This was going to be the major cost reduction for Waymo. Like this was going to be, an order of magnitude less cost than their previous vehicle generation. Unfortunately, they kind of got screwed over by Biden, who's putting 100% tax on Chinese EVs, and this is a Zeekr EV Zeekr is a brand owned by Geely, and that's going to double the cost, obviously, of whatever they were importing it for. But even with that 100% tax, I wouldn't be surprised if it still brings down their cost. So this is really where we need to be going: is no steering wheel, no pedals. And Waymo can absolutely do it. Their cars, never need the steering wheel and pedals. I mean, every once in a while, a human does have to come retrieve it, but I imagine they have some type of override for those situations, maybe a portable set of controls they can bring. And this is really where we need to be going. No steering wheel, no pedals, just a screen in front of the passenger. And it'll be interesting to see how their design compares to Tesla's.
Machine.
Plus, I believe China's afraid to invade Taiwan because they're afraid the Taiwanese are going to start throwing their Thai curry at them, and it's too spicy and it's going to burn their eyes.
Thai curry is from Thailand, not Taiwan.
Dude,
It's
you're
the same
so
places.
you just go back to California. Oh my god.
It's the same place, Omar. Thailand, Taiwan. Okay, it's the same.
Baiting you, Omar.
Is there anything we need to in the last couple of minutes? Let's see. I'm trying to go through it. Oh, what did you think of autopilot being 11 times safer than Tesla releasing the new safety report?
Well, I mean, it looks great, but obviously this is supervised. So the car tried to crash a bunch of times and the human took over to stop it. So it shows that using FSD supervised, you're less likely to crash, which is great. But we really want to see the numbers showing that unsupervised is actually safer than a human. Then the other call out I want to make here is that they're comparing a Tesla with FSD or autopilot on to a Tesla without any active safety features engaged. So automatic emergency braking and forward collision warning and lane departure avoidance and all that stuff, it's preventing a lot of crashes. They're only looking at cars where people have turned that off or don't have those features available. And how many cars is that exactly? Like, I'm a little confused about that, but I guess that is kind of maybe a fair comparison in some sense, because if you keep making the active safety features better and you can never you keep crashing less and less even when you're driving manually, then it makes it a tougher comparison. So maybe they wanted to say, okay, Tesla's with autopilot on versus what they would be doing without the active safety features. But I think that's something to keep in mind with as you look at the data as well. And of course, both are far above the US fleet average, but that includes a lot of cars, older cars. So it's disappointing that the numbers look good, especially the jump at the end for FSD 12. I think that's really exciting. We need to see is them release these numbers regularly, continue to show the trend, and open up their data to independent audits and third-party insurance companies or objective people who can really look at this and who can continue to validate that there are real safety benefits to this technology and to be able to quantify that.
Omar, did Waymo say anything about this purposeful robotaxi scaling? Any plans did they share?
Well, I believe you need an exemption from NHTSA to have a vehicle without the steering wheel on the road. So assuming NHTSA grants them that exemption, this vehicle's much lower cost and should allow them to scale much more than they have in the past.
Yeah. Okay, we'll continue with that tomorrow. I see Machine's raising his hand, but apologies to Machine, we ran out of time, and we'll continue tomorrow. And Patreon only space starting in a minute. Thank you very much, everybody, and I will talk to you tomorrow.